Hello viewers, welcome to my channel. I am Hashim Ali Khan here. Presently we are doing the problems on final accounts of sole trading concern. Already I have prepared the video on introduction to final accounts of sole trading concern. Short problems we have solved, 18 short problems we have solved on final accounts regarding the adjustment in final accounts. So last 3 videos I have prepared on introduction as well as short problems on final accounts. Hope my regular viewers have already watched it, because initial videos are very important to understand the topic. Again and again I'm telling. So if you are new to my channel, first time if you are visiting my channel, go to the playlist of my channel. I have uploaded videos on number of topics of accounts, finance and management, like advanced accounts, corporate accounting, cost accounting, management accounting, financial management, investment management, business studies. So many subjects I have uploaded. Select your concerned subject, watch the video, get a full command on the topic, on the subject. Now in this video, in this session, I am taking the problems on final accounts of sole trading concern regarding trading account, profit and loss account and balance sheet. Making this account requires a lot of knowledge on adjustments. Particularly adjustments are very important. So for that I have given the complete video. Watch the video till the end. So before starting the problems, I suggest you to take a printout of all the problems which I have given in the link under my description. Take a hard copy printout ready before watching the problem. Already short problems I have completed. Now I am starting the main problems on final accounts of sole trading concern. Come on, first problem I am reading out. See the problem carefully. Understanding the problem is half solved. That is more important. Focus on the problem. On 1st April 2011, the provision for doubtful debts showed a credit balance of 2000. Remember, 1st April 2011, the provision for doubtful debts account is showing a credit balance of 2000. During the year, the bad debts amounted to 700. The sundry debtor on 31st March 2012. So our year begins from 1st April 2011 and ends on 31st March 2012. The beginning of the year provision for doubtful debts was 2000. During this year, financial year, the bad debts are 1700. And at the end of the year, 31st March 2012, the debtors, sundry debtors are 60,000 and a provision for doubtful debts of 5% is required to be maintained. This is the information given for the year 2011-2012. 1st April 2011 to 31st March 2012. Opening provision is given. During the year, bad debts are given. At the end of the year, how much are the sundry debtors and how much provision we have to make at the end of the year. This is the complete information for first year, 11-12. Now, the bad debts during the year 31st March 2013. Next year is 12-13. So, the bad debts during the year 31st March 2013 is 1900, 1900. On 31st March 2013, the sundry debtor 56,000 and a provision for doubtful debts of 5% is to be maintained. We are given the data for 2011-12, first year. Then 12-13, second year. So we are having opening provision. We are given bad debts during the year and how much provision we have to make at the end of the year. That's the information given for first year as well as second year. Now during the year 31st March 2014 means the financial year is 13-14. So 3 years data is given, 11 to 12, 12 to 13, 13 to 14. So during the year 31st March 2014, the bad debts amounted to rupees 800 and the book debts on this date amounted to 20,000. Book debts means debtors. So at the end of the year, debtors are 20,000, on which 5% provision for doubtful debts and 3% provision for discount on debtors is to be maintained. So last year, we have to make a provision for discount on debtors also. First 2 years, no provision for discount on debtors. Last year, we have to make provision for discount on debtors. Give the necessary ledger accounts and show how these items will appear in the profit and loss account and balance sheet of each of these 3 years. Now see, we are required to make the ledger account. Ledger account regarding provision for doubtful debts and provision for discount on debtors. Ledger accounts. Secondly, we have to show how these items will appear in profit and loss account. Thirdly, how these items will be shown in the balance sheet of each of the years. This is the main problem. Hope you have understood the contents of the problem, what it is asking, what is given. Now, I'm starting the solution. See carefully here. Final accounts of sole trading concern. Main problem I'm starting now. The first problem, provision for doubtful account. Provision for doubtful debts account. It is given on 1st April 2011. There is a credit balance in provision for doubtful debts of an amount of rupees 2000. That is given in the first line of the problem. The provision for doubtful debts 2011 April 1st. That means the closing of last year will become opening of the current year. So 1st April 2011 by balance brought down 2000. This is the opening balance. During the year bad debts are 1700. So entry for bad debts is bad debts account data to debtors. First entry bad debts account data to debtors. Now bad debts should be transferred to provision for doubtful debts. So entry provision for doubtful debts account data to debtors. Provision for doubtful debts account data to debtors. So provision for doubtful debts debit side to bad debts. To bad debts. Then 2012 March 31st. Actually the entry will be provision for doubtful debts account data to bad debts. Sorry, not debtors. Provision for doubtful debts account data to bad debts. So to bad debts. 31st March 2012. How much are the bad debts? 1700. At the end of the year, it is asking you to make a provision for doubtful debts at 5% on debtors. The debtors at the end of the year are 60,000. So 5% of 60,000, it comes to 3,000. 5% of 60,000 comes to 3,000. So to balance carried down, this is the closing provision. Closing provision. Beginning of the year provision for doubtful debts are 2,000. End of the year provision for doubtful debts are 3,000. And bad debts during the year are 1700. Now find out the balancing figure. This balancing figure will go to profit and loss account debit side. Profit and loss account debit side to provision for doubtful debts. How much we got? 2,700. How we got? Bad debts, add new provision. Bad debts, add new provision. The total is 4,700. From 4,700, subtract the old provision. Opening provision. Opening provision is 2,000. So 1,700 plus 3,000. 4,700 minus 2,000. 2,700 is the balancing figure. This will go to profit and loss account. Over. So this is the provision for doubtful account for first year 2011-12. Right? Now I am coming to the second year. 2012 April 1st. 2012 April 1st. By balance brought down. So last year's closing will become current year's opening. How much is the last year's closing here? 3,000. This will become opening for the next year. Current year bad debts. Current year bad debts are 1,900 given in the problem. Second year 900 bad debts. And second year end, the debtors are 56,000. And it is asking you to make a provision of 5% on debtors. So 5% of 56,000, 2,800. So bad debts are 1,900. Provision for doubtful debts at the end of the year are 2,800. Total will be 4,700. From 4,700, subtract the old provision, last year's provision 3,000. The balancing figure 1,700. This will be transferred to profit and loss account. Current year's provision for doubtful debts debited to profit and loss account. How much? 1,700. 2 years completed. Now I am coming to the third year. The closing balance of the last year will become opening balance of the current year. So by balance brought down 2,800 coming from last year. Now current year bad debts are given 800. Current year bad debts are given 800. Now new provision to be made at the end of the last year is 5% on debtors. The book debts are 20,000. So 20,000 5% you are getting 1,000. You are getting 1,000. Here the new point is previous last 2 years we are getting the balancing figure on the credit side. Balancing figure on the credit side. Debit side was more. Balancing figure credit side. But here it is opposite. Credit side is more. Already we have old provision of 2,800. But current year bad debts are 800. Current year provision is 1,000. So the total of bad debts and current year provision is less than the old provision. Existing provision we have 2,800. We have only 800 rupees bad debts and 1,000 rupees new provision. That means we are getting balancing figure on debit side. So debit side you take profit and loss account balancing figure 1000. That means in this year we are going to take provision for bad debt and doubtful debts on the credit side. First 2 years we are going to take debit side in profit and loss account, debit side to provision for bad debts. First year to provision for bad debts 2700, second year to provision for bad and doubtful debts 1700. But in third year we are going to take provision for bad debts on the credit side. So entry will be provision for doubtful debts account data to profit and loss account. Provision for doubtful debts account data to profit and loss account. So to profit and loss account balancing figure 1000. This is the completion of the account provision for doubtful debts. Now we may make one more account called provision for discount on debtors. Actually, provision for discount on debtors is given in the problem in the last year, 2014. 11 and 12 we don't have. 11, 12, 12, 13 we don't have. 13, 14 we have provision for discount on debtors. So we have it. What is the entry for provision for discount on debtors? The entry will be provision profit and loss account debtor to provision for discount on debtors. How much it is given? It is given as 3%. 3% on the debtors after deducting provision for doubtful debts. After deducting provision for doubtful debts. So third year debtors are 20,000. Debtors are 20,000. How much is the new provision we are making? 1,000. So 20,000 minus 1,000. 19,000 is the good debts. Total debts are 20,000. Out of 20,000, 1,000 rupees are doubtful. Provision for doubtful debts 1,000. So 20,000 minus 1,000, 19,000. On 19,000 we have to make a provision for discount on debtors at 3%. So 3% of 19,000 we get 570. So 570 is the provision for discount on debtors. So credit side we have taken. Now simply take the balancing figure on debit side. Balancing debit side we don't have anything. So 570 you will take two balance carried down 570. This is the balancing figure. I'll write down here balancing figure. Then brought down. Take it on right side, credit side by balance brought on 570. That's it. This is the end of account provision for discount on debtors. So we have prepared the ledger accounts, provision for doubtful debts, provision for discount on debtors. Now we have to show how these items will appear in the profit and loss account and balance sheet. So one by one we'll take. Profit and loss account for the year ended 31st March 2012. First year was 11-12. 1st April 2011 to 31st March 2012. So for this accounting year, debit side, profit and loss account, debit side will take to provision, only debit side. I am not showing the complete profit and loss account. I am showing how this item will be taken in profit and loss account. So profit and loss account, debit side to provision for doubtful debts. First year bad debts are 1700. Provision required is 3000. You can check it here. The first year bad debts are 1700. New provision required is 3000. End of the year provision required is 3000. So bad debts 1700, provision 3000. दोनों को ऐड कर लेंगे 4700. Out of 4700 existing provision beginning of the year, how much was the provision? 2000. So 1700 plus 3000, 4700 minus 2000. So 2700 is the balance. Here I am showing. 1700 bad debts, new provision 3000, 4700 less existing provision 2000, 2700 is the final provision for doubtful debts to be debited to profit and loss account for the first year. Same procedure for second year. Profit and loss account for the year ended 31st March 2013. So debit side to provision for doubtful debts. Bad debts are 1900, new provision required 2800, both 4700, existing provision 3000. So outer column 1700, 1700 will be debited to profit and loss account. It is clear from this account. See here, bad debts are 1900, new provision is 2800. Add up 1900 plus 2800, 4700. From this, deduct the old provision 3000, we'll get 1700 here. 2 years completed. Now I am coming to the last year, 31st March 2014. Now see here, debit side, to provision for doubtful debts. How much are the bad debts for the last year? 800. New provision is 1000. So 800 Bad debts, new provision 1000, 1800 minus old provision. Old provision is 2800. So here what I have written, bad debts 800, new provision 1000, total 1800, existing provision 2800. So 1800 minus 2800, you will get minus 1000. You are getting negative figure. So negative figure should not be shown in the outer column. Negative item will not be taken in the outer column. This item will be taken contra. Contra means opposite side. So this 1000 rupees, we are not going to show it on the debit side. We are going to show it on the credit side. So credit side by provision for doubtful debts as per contra 1000. This is coming here. This is a new point in this problem. Old provision was more, new provision is less. That's why we are getting negative figure. Don't show negative figure in the outer column. Take it into contra. Then provision for discount on debtors 570 rupees. That's all. This is the presentation of provision for doubtful debts in the profit and loss account. Now balance sheet. We are required to show how these items will appear in the balance sheets also. So first we are making the balance sheet, extract of balance sheet, only the part of the balance sheet. On asset side, how the debtors and provision for doubtful debts will be shown. That is the problem. So asset side, balance sheet as on 31st March 2012, asset side, sundry debtors are 60,000, giving the problem. The new provision to be maintained is 3,000. Only new provision we should take. The new provision is 3,000. So 60,000 minus 3,000, 57,000 will be shown in the outer column sundry debtors. So take the sundry debtors minus new provision made at the end of the year. New provision made at the end of the year. You can see it here, 3,000. This is the new provision. So 60,000 minus 3,000, 57,000. Secondly, balance sheet as on 31st March 2013, second year, exactly same. Sundry debtors are 56,000 minus provision for doubtful debts 2,800. You can see it here. 2,800. Subtract 2,800, 53,200. Now last year, balance sheet as on 31st March 2014. Sundry debtors are 20,000. Less new provision. New provision is 1,000. New provision is 1,000. Subtract 1,000, 19,000. Less provision for discount on debtors. Provision for discount on debtors is 570. So subtract 570, 18,430. 18,430 is the total of sundry debtors in the last year. That's all. So in this problem we have seen how provision for doubtful debts account is maintained, how the provision for doubtful debts will be shown in the profit and loss account, how the sundry debtors will be shown in the balance sheet. That's it. So this is the completion of very first problem, first main problem. Now we'll start the second problem. Already first main problem we have done. Now second problem I am reading out. See carefully. In this problem we are required to make the trading profit and loss account and balance sheet. This is the first problem where we have to make the complete final accounts. Now see the problem. From the following figures, prepare trading profit and loss account for the year ended 31st December 2014 and balance sheet as on that date. The stock on 31st December 2014 amounted to 22,500. This 22,500 is the closing stock. Closing stock. This will appear twice. In trading account credit side, again this closing stock will be shown on the asset side of the balance sheet. Now, the items. The items which are given in the problem, you have to decide which item will appear where. The trial balance items will appear only once, either in trading account or in profit and loss account or in balance sheet, any one. But adjustment items will appear twice, right? Now first, purchases, debit side of trading account. Return inwards means sales return. Concentrate on each and every item what I am telling. Return inwards means sales return. It will be deducted from sales. Freight, debit side of trading account. Then salaries, debit side of profit and loss account. Opening stock, first item debit side trading account. Discount received, credit side. This is an income. Discount received, credit side of profit and loss account. Bank balance, asset. Trade creditors, liability. Drawings account, deduct from capital on liability side of balance sheet. Bills payable liability, sales, credit side of trading account, carriage inward, debit side of trading account, rent and taxes, debit side profit and loss account, traveling expenses, debit side profit and loss account, discount allowed, debit side of profit and loss account, commission paid, debit side of profit and loss account, sundry debtors, asset, capital liability side, bills receivable, asset. That's all. I have explained you all the items where it will come. Now, how it will be presented, the final accounts, how it is prepared, I have shown you. See carefully. Only few items you have to remember. Always 4 items compulsory will be there in trading account. Credit side, sales minus sales return, closing stock. So simply you remember sales and closing stock will appear on credit side of trading account. Debit side 2 items compulsory, that is opening stock and purchases. These 4 items normally every problem will have. Apart from that, carriage inward, freight and duty, clearing charges, coal, gas and water, then rent, factory rent rates, excise duty, customs duty. If these items are there, that will be taken on debit side of trading account. In our problem, we have only 2 items, freight and carriage inward. These 2 items will take on debit side of trading account. All other expenses are indirect expenses that will take it on the debit side of profit and loss account. Now, credit side. First of all, the heading should be clear. Trading profit and loss account of dash. The name is not given. If the name is given, we would have written the name. For the year ended 31st December 2014. Debit side, credit side. So credit side, by sales 21,000 given in the problem. From sales return, deduct sales return or return inward. Sales return or return inward means same. So deduct 600, 20,400 are the net sales. By closing stock 22,500 given in the problem. Now debit side, opening stock 12,000, purchases 15,750. We don't have purchase returns. So 15,750 purchase. Freight 265, carriage inward 50. These 2 are the direct expenses, freight and carriage inward. Then gross profit. How to find out the gross profit? Take the total on the credit side. The total of the credit side is 42,900. Take 42,900 on both the sides in the same line. Then from 42,900 subtract minus 12,000, minus 15,750, minus 265, minus 50. The balancing figure you are getting 14,835. This we call it as gross profit carried down. Where it is carried down? To profit and loss account. It is transferred to profit and loss account. So from here onwards we are making the profit and loss account. First part trading account, second part profit and loss account. So by gross profit brought down, here it is carried down, here it is brought down. Above the total carried down, below the total brought down. Carried down debit side, brought down credit side. 14,835. Now any other income, other incomes do we have? Yes, one other income we have. Discount received 110. Only one other income. Now debit side. Salary is 1,570. Always it is better to start with the salaries. If we don't have salary, we can start with any other expense. But better to start with salaries. To salaries 1,572. To commission paid. Commission paid 108. Discount allowed. We have 2 discount. Discount allowed and discount received. Discount allowed debit side. Discount received credit side. 221. Traveling expenses 387. Rent and taxes 526. That's all. Now take the total on the credit side, it comes to 14,945. The total of the credit side 14,925. So from 14,945 minus 1,572 minus 108 minus 225 minus 387 minus 526. The balancing figure we are getting 12,127. This balancing figure is the net profit. The objective of making trading account is to find out the gross profit. And the objective of making the profit and loss account is to find out the net profit. The net profit is 12,127. This will be transferred to capital. Net profit will be added to capital. That's it. So we have completed trading profit and loss account. Now I'm coming to the balance sheet. Balance sheet is a statement, not an account. We don't have debit and credit. It's a statement listing the assets and liabilities. Left hand side liabilities, right hand side assets. First of all, heading should be clear. balance sheet of the name of the person not given, so I am putting dash. As on, don't commit the mistake here. Balance sheet is prepared as on a particular date, whereas trading and profit and loss account is prepared for a period of time. That's why for the year ended we are writing here. Here we are writing as on a particular date. The particular date is last date, 31st December 2014. So assets, liability. So first of all, sundry creditors. We'll begin with current liabilities. We are following liquidity, marshalling of items in balance sheet. We'll follow liquidity method. Liquidity method means the liquid assets and liquid liabilities will be taken first. So sundry creditors, 5,200, trade creditors. Then bills payable, 2,000. Only two liabilities are given, trade creditors and bills payable. Then capital, 28,500 given in the problem. The opening capital is 28,500. To this we add net profit. Just now we got in profit and loss account. Net profit 12,127. Add up, you'll get 40,627. From this we subtract the drawings. Drawings are the amount withdrawn by the owner for personal use. The drawings will be deducted. The net amount 36,127 is the capital at the end of the year. Now asset side, bank balance. First we take the liquid assets, current assets. So bank balance, bills receivable, closing stock. I told you closing stock will appear twice. Once closing stock we have taken in trading account credit side. Again closing stock we are taking on the asset side. Then sundry debtor 6,680. Now find out, if you have not committed any mistake, the total of assets and liability will be equal. Here we are getting 43,327 on liability side as well as asset side. That means correctly we have taken all the items in the trading, profit and loss account and balance sheet. This is the first problem on final accounts of sole trading concern. I have explained all the items. So watch once or twice definitely. If you want the beginning problems, the coming problems will become easier. So give more concentration on the problems. So if you are satisfied with my lecture, give a like to the video. Share it in your groups, in your friends, so that more students can get the benefit. And subscribe if you have not subscribed my channel. Give your precious comments regarding these videos. We'll continue this in the next session.